Hey, good morning, small business owners. Welcome to Monday Morning Metrics and Happy New Year. It is the first Monday of the new year. Congratulations. We are in 2019. So thanks for joining us on Monday Morning Metrics. My name is Rebecca Berneck. I am the founder, CEO, and big head of Office Heads. We're a financial management firm located in Evanston, Illinois. We help our entrepreneurial clients to get rid of their fear of finance, understand how to read their financial reports, and pick your KPIs so they can grow their business very proactively rather than having their business run them. So today we're going to talk about the importance of reconciliation. So I mean, this sounds like kind of a boring topic, but with your business owner hat on, what's super important is having good reports that are accurate and on time. And one of the most important things that putting your bookkeeper hat on, the most important thing you can do is reconcile. Now, the good thing is with QuickBooks Online, and we're Intuit people here, so we use QuickBooks Desktop and QuickBooks Online. The great thing about QuickBooks Desktop is it allows you to be a very quick bookkeeper, because if you connect your credit cards and your bank accounts to your QuickBooks, all your transactions just arrive as they show up. And then you can take a look at them and you can match, add. And it's great to get that information into your ledger. But that isn't reconciliation. Some people call that matching. We call it classification. You're taking everything on a transaction by transaction level and assigning it to an account in your chart of accounts. Hey, that's meals. Hey, that's ground transportation. Oh, hey, that's revenue. That was the check I just deposited last week. So that's really important to get it in there. But reconciliation is another task that is super important to do every month. And let me tell you why. Bank reconciliation compares the information that you have in your QuickBooks file to what the bank or credit card, the financial institution says that you have. So why is this important? It's because reconciliation will find anything that was entered as a duplicate, and it will find anything that for some reason was not entered. So it makes sure that the information is exactly correct as to what the transactions that your financial institution says you have. Now, old school, everything would be done with your check register. If everybody remembers, and even when you get paper checks from the bank, there's still that paper register in there where you write down every single check and you subtract it from the bank balance. And then when you put money in, you add it to the bank balance. So you have a manual running balance in that little paper register. I mean, when I was growing up, I was taught how to reconcile my checking account as a person, right? As a young kid, I reconciled my checking account so I didn't go below zero. Well, now in this electronic world, it is still super important to reconcile against the bank. So what you're going to do is every month when you get notification from your bank, and if you're using one of our favorite tools, HubDoc, it will fetch your statement and you'll see it right in there when you're working through your financial documents. It'll say, here's the beginning balance. Here's the end balance from a period of time. Typically it's a month, and typically it's the first to the last day of the month. However, some institutions, American Express is good for this. I mean, their ending balance and their beginning balance is the day that you actually signed up for the card. Some other credit cards are like that as well. But typically, it's the first to the end of the month. You get this statement. It says, this is what the balance was at the beginning or the end of last month, and this is where it is now. And it details transaction by transaction, everything that went in and came out to come up with those numbers. So what you need to do is open up your QuickBooks, go to reconciliation, check that checking account, and it's really super easy. Whether you have a paper account or you have it next to your screen next to you, you're going to go $8.32, check. $4.92, check. And you're going to go all the way through. And if it works out perfect, the beginning balance and the ending balance, it will reconcile to zero. That's what you want. It's going to say, yep, we found everything in there that you said that you had, and it's zero. Now, if you have certain things in there that weren't checked out that aren't on your bank statement, if it's your credit card, you know that it's an error because credit card is real time. You charged it, it's there, boom, no questions asked. However, if it's a checking account, you may have written a check that has not yet been cashed. So don't just assume that if it isn't on your statement, that it was an error. It depends on the type of account that it is. Now, Office Heads has a best practice. And actually, I think there's about 13 reports that we run on our QuickBooks file every month to find out kind of dirty data in the background. And one of those reports is an uncleared balance report. And so we believe, and actually I think if you take a look at a check, that you can only cash it up to 6 months. So if you've got an uncleared transaction that's older than 6 months, you can either put a stop payment at the bank or just remove it from your books, because either it was a duplicate or it's just not going to be cashed. We don't like to have that data in there because we've seen some books where there was an uncleared transaction from a couple of years ago. That messes up your numbers and you know it's not going to be cashed. So that is the importance of reconciliation. The books that you're keeping in-house need to match what your financial institution says that occurred in that given time period. And if it doesn't match, clean up your books. Get rid of the stuff that's old and isn't going to balance. Or if you go in and for some reason a piece of data didn't come in through your bank, which happens, you can manually enter that in. It keeps your books accurate. And more important than keeping your books accurate, it makes sure that your reports are accurate. Because once you have regular disciplined bookkeeping, followed up by reconciliation, double checking to make sure all of your transactions are in the proper account, then you get accurate and timely reports that you can make really great business decisions and grow your business. So reconciliation might sound boring, but it's one of the most important things that a bookkeeper can do to keep your reports accurate. And if you're your own bookkeeper, make sure every month, first week, second week, that you sit down and you reconcile all of your accounts. And then when you're done, print out those reports and see what they're telling you. And make sure that you understand that story so you can make really great decisions. Okay, thank you so much for joining me this morning on Monday Morning Metrics. Always feel free to use the comments below, because if somebody has a topic that they want me to cover, I would absolutely want to cover it. Other than that, I'm just going to pick my topics as we go. We're going to talk about growing small business through the lens of finance. So until next week, on next week's Monday Morning Metrics, have a great and profitable week.